Aloha, big wave trading family. Probably another long video lesson as the amount of signals continues to be unreal. You can see that the velocity of our uptrend is starting to pick up here. If I wasn't, it's not quite, it's not at parabolic like ascent levels yet. But I tell you what, it's getting a little ridiculous short term. You can see the S&P 500 here. You can see the Dow Jones Industrial Average here, and you can see the Nasdaq. You can see that just the rate of ascent is just starting to get more rapid. Now, because volume is picking up, I think that that's good. I don't think it's going to necessarily turn into churning. Anything can happen. I am personally ready for anything and everything at always. I never marry the long side or bear side. I do have a natural inclination to be nervous all the time. I'm very risk averse, hence why you don't see me just buy 4 stocks and put, all 200% of my margin at work in just 4 names. It's just something I don't do. I like holding a lot of stocks, and as they move up, I hold them, and if they start to move down, I take them out, and if new signals show up, I take them. And that then gets me to my second point. These signals are just insane, and it's not just me. I study and learn from everyone, successful traders in different methodologies. I'm in the middle of learning calendar option spreads. I'm learning calendar option trades based on historical performance of big cap stocks. It's a beta methodology that I plan on employing at some point this year. I started with oversold swing trades, and that's been turning out well in a lot of names. They've done well this week, but the bottom line is that all these signals are indicative to me of a market that still wants to go higher. If you remember back here when the market was kind of trending nowhere in the NASDAQ here, I was getting a lot of signals, and I kept telling everybody, short term, the market looks sick, but with all these signals, it's probably indicative of a market that wants to move higher. We then moved higher. Here, the same thing happened in October. I said that the market looks sick, but there's still a lot of long signals indicating that the market wants to move higher. Boom, we did. And just recently in November, December, we had the same situation happen. Market started to pull back. It looked sick short term, started to enter some hedges, but long signals, even more were showing up. Boom, we moved higher. Market started to move sideways here. Market kind of looked sick after this day, but on this day, there were still new long signals. The next day, more showed up, and here we are moving higher. So once again, even though that we're up here, there's a lot of fresh new looking long signals. Please go to the new positions page, obey those good to cancel buy limit orders, and if you do take the speculative or riskier trades as I have outlined in the new positions page, like I do every day, please obey the first stop loss only. Now, my notes are scattered here, so I'm just going to go down the line. The safe trades are EIG, and you can even use 2 different stops here. I can't remember what I wrote in mine, but I'm willing to have a stop here and a stop here. If you go long the stop, you should probably only have a stop here, and you shouldn't pay more of the high of the day. And I'm always looking for a previous measured move, and on EIG, it's this move, or the entire, hopefully, November to November move. So I'm always looking at the previous uptrends for measured moves on trend following signals. So on EIG, that's what I'm looking for. But this is a safer signal since you don't risk much more than 3% to be wrong. CSGS is also a safer signal. Safer signal. You need to go look at the new positions page once again to get the exact levels. But once again, using the high of the day as a long, first cut loss level, second cut loss level, you don't risk much if you're wrong. And CSGS, I'm looking for a measured move similar to this move here, or maybe it could even do an earlier move like it did from 2014 to 2017. I'm always looking at past measured moves to dictate how they should move from their setup there. And then the other safer one is, not that one, HRS. HRS only showed up in my tertiary scan, but this is an ex-Cancelim quality stock, and the way that it looks, it'll probably be a future Cancelim quality stock. It's just a very, very nice tight consolidation pattern. And what makes me really want to get long this stock is that I was interested in it here, but passed on it because BOP and volume went the wrong way. I was interested in it here, but that previous price bar kept me away. The pocket pivot point signal here is nice, but now it's not showcasing short-term higher highs and higher lows convincingly following that one candle. I was interested in it here, so I'm going to take it now. So this is about the third time in the past week plus that I've been interested in HRS, I'm taking this long signal. BOP is slightly higher than the session before, another above average volume with a pocket pivot point signal. This is a safe trade once again, using the high of the day as your limit. First cut loss level, second cut loss level. Now, besides those stocks, the rest are risky. We're going to start going through them now. TLRA, this is extended from every single moving average. That's short term, but it's right there at the 50, so this one's clear cut. You go long at 437, it fails this green BOP low right here, you're out with TLRA. Now, for the way that I'm going to be playing it, you got to go to the new positions page, but that's how TLRA should go for you guys if you decide to trade it and you do not have a track record of successful trading yet and or are new. Same with USAT. You go long here, 960, it moves below 925, you're out. USAT moves higher immediately or you're out. Now me, because it's a smaller position, I can't get a full size, it may not work higher immediately. It may hit this stop, but hold this level right here and then rip higher. So I'm willing to give it room to run. But if you're a new trader, you're going to take these risky trades. You got to protect your capital at first. So whenever you do get a big win, like maybe CNIT, whenever you do latch onto a CNIT, that arrow means that's where I initially went long. You can get those big, large gains with most of your capital instead of having it picked away by chasing some of these speculative long positions. And same with ARL. ARL, you want to get long at 1269, but if it fails this low right here, you want to get completely out. I'm willing to have this as a second stop, but there's no way that you should let it go beyond here. And in fact, do you see the volume? Do you see all the gapping? You shouldn't even touch it. Don't even touch it. I can just do it because the amount of capital I'm putting into it is worth it for me. If this thing all of a sudden gaps down to $8, guess who it's not going to hurt? Me, because I'm going to position size properly. I've been around long enough, I know how to do that. But ARL should be one you should avoid, but I'm not. CVGI, I like this one on a longer term weekly chart. Nice big uptrend, but remember, the best stocks are the ones that are breaking out or near all-time highs. CVGI is not, so even though it's nice on short term, I'm not going to marry it. It's either going to work out immediately or I'm out. Now CVGI, if you decide to go long, you go long at 1101. Maybe you do 1103, the high of the day, but this is your first cut loss level. It goes below this low here, you're out. Now I'm willing to give it to right back here because once again, I can't get a full position. I don't know if it'll rip higher immediately, so I'll give it some, I'll let it have some give and take before it moves up. AKCA, same thing. If you go long, that's it. Your limit's the low a day, 1642. It hits 1641, you're out. But me, I'm going to give a second stop all the way back here. Now, don't forget, on all of these, it's the same thing. The first stop goes, it loses the green BOP catalyst and or does it on heavy volume, and especially if it does it losing the green BOP and on heavier volume, all the stops get raised, but either have to all stops always get raised whenever the first stop goes. There's no questions asked. And once again, look at the previous measured move. So with AKCA, I'm looking at trying to get a 214% move while only risking 5%. That's the theme. Big previous measured moves, inherent risk to potential reward is always greater than 4 to 5 to 1. So those are the quality long positions. What's left are the ad signals. Caro is a higher quality ad signal. Ex-Cancelim quality stock, maybe a future Cancelim quality stock, was in my green BOP for 20 days scan. This is a very nice one. This is an ad signal, another ad signal, but it's right there at the 50-day moving average. But even then, it's still a little extended. It's from its 10, 5, and 20-day moving average. So it's risky, even though it's right at its 50-day moving average. But beautiful little chart pattern. Same thing, though. If it fails this low here, that's it. You should be out. And GDOT, look at this longer-term chart. This is what you want to see. These are my kind of stocks. Stocks near all-time highs, 52-week highs, big previous uptrends, nice long consolidations. Nice move off the 50-day moving average, right? But get up close to it. It's extended from its 5, 10, and 20-day moving average. None of those lines are in the price bar, which means it's suspect to pulling back before running higher. So for me, I'll use multiple trailing stops, possibly using this one included with the ad signal. I already have a small position in GDOT. We'll see if it continues to work out. But once again, you can't chase past the close. And if it fails this level, you're completely out. So those are the new long positions. Go to the new positions page to see where the limit is and where the stops are exactly. Everything price should be right. There should be, I think I messed up on EIG. It's a 5-cent stock and I treated it like a 1-cent stock. But getting to the sells, KOL, IO, SIFI, EFV, CCCL are all producing the same or triggering the same cell signal. If you go look at your RSI 14, you'll see that it's above 80 or above 79.50 or above 85 or above 90 or above 95 to then trigger another 20% cell signal on all of these. So that's why we lock in gains with all. IO at 62%, SIFI at 75%, CCL it's 46%, EFV is 22%, cold is 11%. And then there's CNIT. The day before, it produced a 20% cell signal. Now, it wasn't its heaviest volume ever. It was a fresh breakout, so it's only a 20% cell signal. And normally fresh breakouts aren't 20% RSI 14 profit taking signals when they're fresh. But when CNIT, a more speculative stock, makes a huge move like that and closes near the highs, and then I go check after hours and I see that it's now up over 100%, it becomes a 20% sell signal. And that's what I did on Friday morning with CNIT. But by the close of Friday, CNIT then was triggering another RSI 14 profit taking signal. But since this one is on the heaviest volume that it's ever had, it's a 25% profit taking signal, not 20%, for a total gain of 141% currently on the position. I'm also moving one of my stops up to Friday's low a day. The next one's at Thursday's low a day. Here, and here, I believe, are the rest of the CNIT stops. Now, going off to the sell signals, it was all 50 percenters. Pretty clear cut on all of them. STZ, closing below the 20-day moving average on above average volume, 50% sell signal, locking in a 4% gain. AVXS, same thing, below the 20, actually below the 50 on above average volume, negative BOP, leaving half of it, 24% gain. SRPT, immediately closing below the 20-day moving average since going long, not really producing any gains. You better believe that's a 50% sell signal, 1% gain. Remember, I always round down. I do not round up. Most people round up when talking about their winners. I round down. And whenever I talk about my losers, I round up. Most people round down. So I'm trying to be as close as possible to the actual percentage gains in my Interactive Brokers accounts. HGV closing below the 50-day moving average on above average volume with negative BOP. You better believe that's a 50% sell signal. 2% gain. SNDR closing below the 20-day moving average on above average volume after an already bad session, the session before where it has a negative price bar. It's kind of a shooting star price bar. Shooting stars when we come up, I'm not sure what you call this one. Either way, that's a negative candle. The close below the 20-day moving average on above average volume solidifies a 50% sell signal. That's a 10% gain. RCMT still's got that beautiful green BOP, but it's closing below the 20-day. This chart's useless on Telechart. You got to go look at stockcharts.com to get the proper chart, but you'll see there it's closing below the 20-day moving average on above average volume. Since it's showing a loss on that 20-day moving average close, it's a 50% sell signal, even with the max green BOP, negative 2% loss. SEAC rolling over on heavier volume below the 20-day moving average. That's a 50% sell signal, 8% gain. WVE is not moving higher immediately. My first cut loss level was 33.70, closing below 33.70 at 33.55 on below average volume. BOP going the right way. That makes it just a 50% sell signal. So with what I have left, my final sell stop remains the 50-day moving average. It's dynamic, so you have to move the number. And the first stop is Friday's low a day on WVE. And SGC is triggering an end of day 50% sell signal. I got out of some of it here when it went below that low, got out of some of it here when it went below that low, got out of some of it here when it went below that low, and then I used this low, so I got out of more of it on Friday before triggering this 50% sell signal. I can hold, like I said, 10, 8, 7 stops, and then all of a sudden chop them all up into 3, and that's what I have on SGC. 50% is right here below 23.89. Then I have 25% of what remains here and 25% of what remains here for 3 total stops. Just a few days ago, I think I had anywhere from 7 or 6 on this one. Now there's just going to be 3. Half here, 25% here, 25% there. All right, guys, we're about 15 minutes in this video. All I want to end this video on to why this market could really ramp here. And then I don't know, maybe it goes parabolic and we blow off and top out. I don't know. And or maybe we just keep doing what we're doing. We do a rush higher, pull back, find support above the 50-day moving average, base out, then move higher again. Either way, there's some good news on the sentiment front, slightly good news, not that much. The IBD put call has moved higher the past 2 sessions, despite the market moving higher the past 2 sessions, and it's near 0.90 at 0.86, so that's actually decently elevated for a market at new highs. More shocking, the NAAIM exposure index 3 weeks ago was over 100% long. It came out on Thursday or whenever it came out last week, and it's down to 57.95%. That means, according to the exposure index, institutional investors that are telling how long they are only 60% long this market, hitting new all-time highs. That sounds pretty contrarian to drop from, let's see, 3 weeks ago we were here. The NASDAQ's up 4% since then. The Dow Jones Industrial Average is up almost 3% since then. But yet we've gone from 100% invested to only 60% invested with institutional money managers. Quite interesting. And then if you ever think it's too greedy out there, I always like to check the CNN Greed and Fear Index, which looks at a bunch of different data points. You would think it would be near 100, but instead it's just greedy at 75. So I've seen it at 100 many times. So we're nowhere near extreme greed. So long video lesson. I hope everybody watches it. Yeah, that's it. We'll see what happens on Monday. I will see you in the chat room. Aloha.